Hi, welcome. This is Mary Ellen McGonigal, Senior Managing Director of Equities here at Simpler Trading with your weekly Edge show for September 9th, 2022. Let's go ahead and jump in, take a look at today's agenda. We are going to look at some of the more impactful news that drove price action last week. Very nice rally taking place. Also, we'll take a look beyond that and review how the current markets closed for the week. Is there sector rotation taking shape? Yes, there is. We'll get into that. And then viewer question of the week. And it's all about which mega cap name is looking the most constructive right now. And there are two candidates that I will go ahead and share with you with an eye toward a potential continuation rally in the broader markets. So let's go ahead and take a look at some of that news from last week. Interest rates and the US dollar remain elevated. We'll get into that. I will share with you some charts and also share with you the impact of this taking place. Alternative energy stocks really heated up last week. We saw a very decent rally, all about analyst upgrades and the group getting funding from Biden's recently signed Inflation Reduction Act. Also, the Fed officials came out, several of them, and spoke last week, reiterating the Fed's aggressive stance as it relates to monetary policy, and for the most part, investors shrugged that off. That was very interesting, where in the past that would cause the markets to decline. Also, Fed Chair Powell spoke yesterday on Thursday. He did also reiterate aggressive Fed policy, and again, the markets looked the other way. Also, next week, very impactful news on Tuesday. We're going to get that consumer price index, and that is a number very closely watched by the Fed. It is an inflation gauge, and depending on the results, we'll see what the markets take shape after that's reported. Retail sales and consumer sentiment are also going to be reported next week, and this is another area that the Fed is watching closely. They are on the goal to reduce consumer spending to bring inflation down. So any elevated numbers here would not be good for the markets as well. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. And we did have a significant rally, up about 3.8% for this holiday shortened period. And you can see that we did break above this key 50-day simple moving average that was considered near-term upside resistance. So a move above that is constructive. We need only go back to this July period when we broke above that 50-day simple moving average. At this time, it did signal further upside. Of course, the backdrop was different during this July into August period, and I will get into that as we move forward. But looking closer at the current price action in the S&P 500, we do still have this 21-day simple moving average, and then again that 200-day moving average acting as potential near-term upside resistance. As we may continue with this rally, we are going to keep an eye out on price action at these MAVs. Also, RSI trending upward and in positive territory. That's good news. However, our momentum indicator down here at the bottom is the stochastics, and a bit faster moving, but not fast enough this week. It did not break above 50 into positive territory. So, and again, going back to this July period, we did experience that positive stochastics and RSI. So a bit mixed, but certainly constructive with this move and close above the 50-day simple moving average. From here, let's go ahead and dive a bit deeper. Take a look at the 11 underlying sectors in the S&P 500. This is a 2-month daily price chart view of those sectors, and I added an RSI, a relative strength indicator, sorted the list in descending order. So up here in the upper quartile are your stronger sectors, not just for last week, but overall and current. So up here in the forefront are utilities. They have been up at the forefront for some time now, but last week the group was up over 4%, a very significant rally for utility stocks. A lot of this having to do with primarily those companies that offer alternative sources of energy. Those were on the move. We can see the group is now back above each of these moving averages with the outside momentum indicators in positive territory. Next up here are consumer discretionary. This was the top performing sector last week, up almost 6%. We can see that the group pulled back very orderly to this 50-day simple moving average and is currently trending higher. This 200-day moving average being the next area of upside resistance with positive momentum indicators. And there are themes emerging among consumer discretionary, primarily discount retailers that are on the move and now above key areas of resistance. Also up at the forefront, this is a newer group. This is financials. They had been languishing for quite some time after peaking at the beginning of this year, and we can see a pretty significant rally, up 4.6% for the week. In this next segment, I will share with you the area and why we are seeing a rally. We're not quite out of the woods yet. Again, we do have this downward trending 200-day, but your momentum is trending higher in financials, so that's certainly newer. Another area up here at the forefront are healthcare stocks. They had been stumbling of late, but another area that had a significant rally, also up 4.6% with this 200-day looming as potential upside resistance. But this is another area where I will share with you where that relative strength and outperformance is, all with an eye, so that you could potentially participate in that outperformance. From here, we do want to be aware of some areas that are underperforming. Technology remains down in this lower weak quartile. This is XLK, the ETF for tech stocks, and the group was up 3.4%, very respectable, but less than the S&P 500. We can see that it had a rally, but not as dynamic as certainly discretionary and some of the other areas that we will be looking at. Also, your momentum is not in positive territory yet. Your RSI is still below this 50, and this is this MACD moving average, convergence, divergence, and we still are quite far away from a potential positive move in this MACD, so very early in its potential advance, still has many areas of upside resistance. However, in the beginning stages of potentially turning higher. So from here, let's take a look at some underlying areas outside of the sectors. And these are ETFs that from my work are very, very relevant, very powerful in helping keeping you on top of where, again, that relative outperformance, where accumulation characteristics are taking shape, and that relative outperformance. So again, 2-month daily price chart view with that relative strength indicator used as the sort. So up here in the forefront, I mentioned this at the beginning, this is the yield on that 10-year treasury, and it remains quite elevated. It's at 3.3%. This rise in interest rates historically has been negative for growth stocks, and we did see that technology languish. However, again, discretionary, another high growth area, had a very excellent week. So mixed signals as it relates to the response to higher rates. But let's take a look. This is the US dollar. It did pull back as the week progressed, but still remains up here in an elevated level, and that is having an impact certainly on multinational companies where their revenues will be reduced overseas sales. Up here, I talked about healthcare stocks on the move, and this is one of the primary reasons. This is biotech ETF IBB. You can see it had a pretty significant rally over the past few days. The group was up 6%, and it is poised to break back above this 200-day simple moving average. Very, very big volume characteristics taking shape here. There certainly were some heavyweight names that had positive news last week, but overall, the group is on the rise. The significance here is that biotech names are risky, so a move into this area normally does indicate investor confidence in the market. So we're going to keep our eye on that biotech space, see if we can see a continuation rally take shape there. Financials, I mentioned, were on the rise, second best performing sector last week, and here we are. This is the ETF for the S&P 500 Regional Banking ETF. You can see this sharp V-shaped recovery attempt. This particular ETF was up almost 4%, not quite overly bullish, but I do have highly relevant names on my MEM Edge report watch list that is posted for those of you that are subscribers. From here, we can take a look, of course, want to be aware of those weaker areas and take a look. Brent crude oil, this is the per barrel pricing, is declining. We're down at that $89 per barrel level, and you would have to go to December of last year to see a level that low. In turn, energy stocks rallied only 1% last week, certainly a lot less than the broader markets. Another area in this weaker quartile down below, and this is good news, volatility is continuing to drop. The volatility index, that is the VIX, and here we are at 23 on that index, and we can see when we have volatility declining, that's generally good for the broader markets. I mentioned that rally from June into August, and it does correlate well with this declining volatility, also known as the fear index. So as it declines, it indicates confidence among investors. So we're going to be keeping a close eye on that volatility as well. Also in the weaker areas, semiconductors, they did have a decent week, up almost 5%, but very myopic in this rally here. A lot of the bellwether names, NVIDIA among them, did rally about 4 to 5%, but not looking particularly constructive just yet. Your momentum is not there. The indicators are in negative territory, so I would not be a buyer in semiconductors, but certainly, as always, it is on our list to pay attention, be on the lookout for a move into this upper quartile where the group could potentially be exhibiting superior outperformance. So from here, I talked about that viewer question of the week, and I thought it was really fantastic because as the markets could potentially continue to rally, you will want to be aware of those mega cap FAANG stocks. How are they performing? Are there names in this elite large cap list that are looking constructive? And here's a view from today's performance of the 7 top mega cap names: Meta, Tesla, Netflix, and so on. And we can see that there were select names that had very nice outperformance today. But let's go ahead from here and take a look at that 2-month daily price chart view, and again that RSI, so that we can see, are there names that are stronger than the others, because those stronger names, if the markets continue to rally, they will outperform. So here we are up at the forefront with Tesla, and Tesla had a superior week. It was up almost 11%, but this is a very orderly pullback that you want to see in a stock that you may be considering adding to your portfolio, where it pulled back very orderly to this upward trending 50-day simple moving average, and this week's rally pushed the stock back above that 200-day, and pretty decent volume here. Let's look at the momentum. The RSI is above 50 and trending higher, and we are poised to get that black line up through the red, which signals that this pullback has turned into an uptrend. I will want to see a little bit more in the way of a presence above this 200-day simple moving average, but of those mega cap names, Tesla is the superior one as it relates to their chart and its outperformance. From here, another stock that I did want to highlight is Amazon. I talked about consumer discretionary and retail names that are on the rise, and this is another name among those mega cap stocks where it pulled back to this 50-day simple moving average. Did not have as an impressive rally this week. However, we did get that momentum up here into positive territory, and this MACD just now poised to cross above that black line up through the red with a break above the moving averages here. That would be quite constructive for Amazon. And just for a quick comparison, let me share with you Apple. And we can see that Apple had been a big outperformer going into the end of August. However, after this deterioration, it really has languished. Last week, the company had their big announcement with their new product line, and investors were not impressed. We can see the stock had a very tepid rally last week. It was was up only 1%, and it is now below this 50-day simple moving average. I will want to see a break above at least this 200-day with a move in these momentum indicators into positive territory. But for now, Apple does not look constructive. I'm going to leave it at that, everyone. I hope you have a wonderful weekend, and I'll look for you again here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.